Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. What we're trying to do is get you what you need to know before you go. So we'll start out with talking about the economic data, the geopolitical environment, what's impacting the markets basically, and then talk about some strategies we can implement into our portfolio based on those assumptions. All right, so without further ado, let's get on with the economic data across the pond. What's going on over there? Well, all eyes are on us here today. Why? Because we have the non-farm payroll. It is the first Friday of the month. We get the most important data point of the month in U.S. non-farm payroll. So that's going to be coming out at around, excuse me, that should be coming out probably in around the next hour or so here. So keep your eyes out for that. I do expect it to come in a little bit better than expected, as everybody seems to be trying to hire. So I would expect to see the unemployment rate start to drop a little bit here. I think that folks are getting hired and are actually at a point where they are looking for employment if they've been holding off too long. So that's the way I think we're going to start seeing that happening. But what's going to trump all of that, rather than having eyes on us here in the United States for our non-farm payroll? Well, Putin has taken over a nuclear power plant in the Ukraine. So that has really started to send some real tensions in the markets higher, for lack of a better phrase here. Everything is a little bit tumultuous, if you will. The nuclear power plant apparently is on fire. So like that's a little scary. All right. So without that said, with that said, I should say, let's get on with the overall markets. Take a look at what's going on here. We're going to continue to see some strength here in crude oil as sanctions start to push through with Russia. Saudi Arabia is not increasing any production here. So we're starting to see the crimps here. We saw the demand for crude oil. There's a little bit of a supply constraint going on. Manufacturing is continuing to ramp up. That is demand for crude oil, folks. So keep your eyes on this. Risk is definitely to the upside. Anything that is gasoline related, or oil related, which would be polypropylene, any of the byproducts of crude oil, those prices are going to drive higher for plastics here with the lack of there's a resin plant down in Texas that burnt down. So that is also limiting some of the supply. So those demand constraints are in full swing with things like plastics. Bonds continue to push higher. The reason why, well, we heard Fed Powell say that basically we're looking at a 25. He was much less aggressive than what we were seeing before. That's what I said, folks. When these guys were talking about raising it 50 basis points at a crack throughout the year and getting it up above 2% in 1 year, well, I didn't think that was going to happen. We're just not seeing the economy really taking off. Now we're seeing some demand there and stuff like that. Don't get me wrong. It is strong, but the levers and pulleys of the market are really fragile right now. Remember, we've heard him talking about allowing free markets to start to take full swing here by pulling back on the Fed buying of assets and slowing down some of those asset purchases there. That will allow the markets to really start working themselves out of some of these areas that the Fed has been pinning the markets. Fed, I don't think, is driving bonds here. I think the bonds are just a product of flight to safety here, with equities looking to roll over. Now, something to note, we've been talking about gold making those moves to the upside, folks. Well, that's not surprising here, because we're seeing the rotation out of some riskier assets like equities and into things like gold, which is a retainer of value, quote unquote. And I've been talking about Bitcoin getting a little bit of this ancillary buying pressure when people are rolling out of some of their stocks that they've been hearing about Bitcoin for several years now, and they're probably a little bit more comfortable with it. So I thought that we would see a little bit more pressure, buying pressure here in Bitcoin, but just not getting that follow through. As a matter of fact, this ticker has fallen out of like the top 50 of search tickers. So that even is really making me question my thesis on folks coming in and buying Bitcoin, because it is going to be a quote unquote retainer of value like gold. That's just not being the case here. It's really the lack of anybody looking for that stock to offset, if they're not searching it, they're just not interested right now. That doesn't bode well for Bitcoin going forward. All right, VIX is moving higher, and that's because we're seeing these tensions really rise in Europe. Not surprising here that folks are going to be heading into the weekend wanting to cover some of their positions, hedge it up a little bit. Well, we talked about this last week. That didn't really follow through. As a matter of fact, on Friday, we got a bit of a rally there into the close of last week, which was a little bit more dicey than even this weekend, as far as I'm concerned. So I could be completely off my rocker. Some of you folks out there might be looking at the charts and saying that since it came off of this support level here in the Fibonacci's, that it is going to be a bullish move. But I'm, folks, still worried about the risk to the downside across the board in equities. I think with the volatility as high as it is, it's time to really think with the pullback here, what do I want to do going forward? How far do I want to look out in time to add to my portfolio? If that's something you're really concerned about or that you are top of mind aware of, selling puts in an environment like this is something that should be considered for most people. Why? Because they're cash secured puts for the most part, and you would be looking to actually buy that stock if it came to your level. So those are different things that we can look at for portfolio management right now. And if you have stocks, bonds in your portfolio, doing covered calls in an environment like this with high volatility allows you to get really far away from where the underlying's trading. So the probabilities of getting up there are less likely, and you still get to keep that credit. So we talk about all of those things in these video webinars that I've been doing lately. So please check those out at Pro Trader Strategies. And before you go, smash that like button and hit the subscribe, folks. Right next to it, there's a bell that will let you know when I come in and announce for these type of videos where I'm going to be talking about my trades. So make sure you have the subscribe button, and I'll circle back around to see if anybody's commenting. Make sure you all are clear of concept. That's all I got for you, folks. A little bit later on today, I'm going to be doing an interview with Westmark Trading, so come check that out. If you can't take that, take it easy. The dogs are all fired up. Bye for now.